Hello, I'm Mike Hetman, and this is CMS Forex News. Today is Tuesday, March 25th, 2008. The UBS Consumption Indicator showed robust consumer spending growth for February, surging to a 2.321 reading. This was the highest level in 8 months and came on the back of strong retail activity and new car registrations. New Zealand consumer confidence for the first quarter plunged. The Westpac measure of confidence dipped from 110 to 96.5, the lowest level in over a decade. Consumers turned pessimistic as they faced rising food and gas prices, higher mortgage interest rates, drought, falling house prices, and turmoil in global financial markets. Canadian retail sales saw a strong 1.5% increase, the best figure in 8 months. Spending was aided by a 1-point cut in the federal sales tax. Strength was seen across different industries, and core retail sales posted a much better than expected increase as well. Yesterday, existing home sales for February surprised forecasts and increased to a pace of 5.03 million. Expectations were for a further deterioration. It is the first signal to suggest a bottom may be forming in the existing home market. Today, the S&P released its measure of metropolitan housing prices during January. The 20-city index slid 10.7% from the same period last year. Lower prices and the recent interest rate cuts by the Fed can perhaps stimulate buying. However, it will leave sellers with less money for discretionary spending. The Richmond Fed Index registered a positive measure for March, for the first showing of growth in 5 months. Economists had expected another month of contraction for the Atlantic region manufacturing. This good news was spoiled by the Conference Board measure of consumer confidence falling to a 5-year low of 64.5. With weekly jobless claims hovering in the 370,000 area, workers are starting to feel the effects of a weakening labor market. The euro-dollar pair climbed today after setting a low at 1.5350 during Sunday trading. After last week's surge by the dollar, the euro is now rallying again. The markets turned dollar bearish as investors and traders speculated that the Federal Reserve will cut interest rates by as much as a half percentage point next month. In today's session, the pair jumped 150 pips from its open and was trading near 1.5570 as of noon New York time. The pound dollar is up 225 pips since it settled low near 1.9750 during Sunday trading. This week's rally has so far pared half of this major's losses from its decline last week. The dollar-yen rose in favor of the greenback as U.S. stock markets were heartened by better than expected existing home sales data and the news that J.P. Morgan was increasing its offer for Bear Stearns to $10 a share. The pair set a high overnight at 101.03, from which it fell around 130 pips to settle low below 100 in New York trading. Today's fall was precipitated by overall dollar weakness and today's pessimistic consumer confidence data. Carry trade and risk appetite came back to the forex markets on Monday as the pound, Aussie, and Kiwi gained on the yen. However, on Tuesday, the rally stalled and began a period of consolidation as can be seen here in the pound-yen pair. From the start of the week, the pound is up 340 pips, with resistance set at 200.90. Tonight, Japan will post a measure of producer inflation and its trade balance. This is followed overnight by a survey of German and Eurozone business conditions. The Eurozone will also post its current account and industrial new orders. Tomorrow, the U.S. releases durable goods orders and data new home sales. And this wraps up Forex News for Tuesday. For CMS Forex, I'm Mike Hetman. Join us again tomorrow.